Hey, what's up everybody? It's your mortgage expert, Brian McCauley here. So are you or somebody that you know looking to buy a house and they're dreading the mortgage process because they don't want to get their credit pulled, they don't want to have a hard inquiry? Well, guess what? Today's your lucky day. Stick around. In this video, I'm going to show you why we don't have to do that anymore. So listen, as DFW continues to expand and more people are becoming buyers with the limited amount of inventory, we are seeing people getting pre-approved weeks and months in advance. This is a very good thing for future homeowners to do to make sure they have all their ducks in a row and their financials all squared away to make sure there's no big surprises. But doing this for 18 years, I come across this question all the time with people that are going to want to buy a house when it comes specific to credit inquiries, credit and pulls. Some people call it, pull my credit, yank my credit, do a credit run, whatever it is. The concern is they don't want their credit reviewed by us and they don't want a hard inquiry done on their credit scores because they think it's going to pull their credit scores down. So what I want to do is I want to share a few things today, actually 3 things today that are in the buyer's favor that we can temporarily avoid a lot of this up front and set you up for success behind the scenes without having to do a hard credit pull right away. New tip number 1, we have a program now where we can do a soft credit inquiry. A soft credit inquiry means we're going to retrieve some of your data from the bureaus, which is going to give you a majority of all your accounts and your profile, and it's going to give us all 3 of the scores as well without having a hard inquiry, because a hard inquiry can lower your credit scores. We'll talk about this in a minute, but right now with the new program that we have, we can basically get the same data from a soft inquiry. So it gives us, as the mortgage advisor, all the information that we need. It gives you, the potential home buyer, the peace of mind that, hey, Brian, this team now has my stuff, but of course it didn't cost me X, Y, Z in points, and there didn't have to be a hard inquiry, so both parties win. So let me tell you how this works. We've got a new software that'll go in and grab, again, about 80 or 90% of the information very softly. There won't be any hard inquiries. There won't be any lowering of the scores. And so now with this new program, we're able to obtain all the credit information that we need to give you a pre-approval without having to have a hard inquiry and having it affect your FICO scores temporarily. Why do I say temporarily? Well, once you actually decide that you want to move forward for real and you're committed, worst case scenario, once you're under contract, you have to let the lender at that point do a hard inquiry, because the soft inquiry has most of the data, but it doesn't have all of the data. And the reason is because to get all of the data, you have to do a hard inquiry all the way from the bureaus on the top down to make sure we don't miss anything. But the soft inquiry will give us 80%. So if we want to know what the scores look like, we want to know the debt to income, maybe we need to improve the FICO scores, paying down some credit card balances, right? Removing some collections, making some moves on the credit profile. We can do all this with the soft inquiry as well. Another great thing about this for you as the consumer is 2 big things now can happen with this new program we've got with the soft inquiry program. 1, if you've ever gone to buy anything, car, house, whatever, sometimes when people do hard inquiries, they sell that information to a third-party vendor. So you'll randomly start getting phone calls from random people all the time and say, hey, did you go to buy a car? Did you go buy a house? And you're like, who are these people? Why are they calling me? How do they get my information? So this whole gang of folks that lives in this credit world, they do this, right? They get the information after a hard inquiry is done. These institutions sell it to a third party. The third party people hound you and call you and call you and call you. It just becomes overwhelming, and it's not the way to buy anything, much less the biggest investment of your life, aka a home. So with the soft inquiry, we don't trigger any of those third-party people to bug you and call you, so that way you can enjoy the experience all the way to the finish line. And when we go to do the hard inquiry, there are a couple tricks that I'll share with you when we do a one-on-one consultation, how to avoid those calls in the future. But with the soft one, it won't happen regardless. The second thing is automated approval. So mortgage institutions are full of human beings that are trying to put together the paperwork for clients to get everything done. But part of our industry, part of our system is we have a lot of automation. We have automated engines. They are very fancy robotic brains that mortgage officers and processors and people take a bunch of data meaning people's income, people's assets, their credit report, their credit profile, and we stuff it into this engine and we fill out all these fields. And really what it does, it renders a decision. So it says, yes, this person is approved for XYZ loan. Now get all the documentation. If anything changes, you can change the decision. Or no, we don't like this person because credit, debt to income, whatever it says, In the old days, before we had this new program, we had to have a hard inquiry and a full, real, accurate credit report before I could serve it into the engine and get a decision. Guess what? Now, that's not the case. I can give it the soft inquiry data where it's got majority of the credit profile and all 3 scores, and it will still render a decision. Now, that doesn't mean that decision will hold and it'll be the same decision once the hard inquiry is done, but majority of the time, if the automated engine likes what it sees in the soft inquiry, unless there's something out of left field or something that's off on the scores in the report when we pull the hard inquiry, 99 times out of 100, that approval is going to stick. So you don't have to worry about any negative items on your report whenever we do the inquiry because it's a soft one. You don't have to worry about anybody randomly calling you from third parties trying to hound you so they can get their business. You don't have to worry about having to do a hard, full credit report up front to get an automated approval. We will be able to do that automated approval with a soft inquiry. And then last but not least, these soft inquiry reports never expire. One of the big challenges people go through is they get pre-approved and the credit report's good for 90, 120 days, and something happens where they just can't find a house, or they press pause, or maybe they move to a new construction, or something happens to where their finish line becomes further out in time than they had expected, and us as the lender only can have credit reports for probably up to 120 days. And so if that time passes and you get past 120, we as the lender have to reissue credit again once the time comes that you get serious about closing on a property. Instead of it being 1 hard inquiry, it would have been 2. Now when you do the soft inquiry, everything holds. There's no expiration on the soft. So whether you end up getting a property in 30 days, we'd move to the hard inquiry, the real report, or whether you did it in 9 months, we'd move from the soft inquiry to the hard inquiry, but it'll only affect you once. So that's also a big, big thing that people are liking about this program. Last thing I want to shed some light on around a hard inquiry and how it really works. So credit is a funky thing. I'll save it for another video, but when it comes to hard inquiries on mortgage scores, this is how it works. You have 3 credit bureaus with 3 scores, okay? I'll give you an example. Let's say somebody is a 700, a 710, and a 720. Those are their actual mortgage scores today. When we do a hard inquiry and we pull their credit, people are always concerned that it'll drop their FICO score. That hard inquiry is normally about a 5 to 7 point drop. So each score would drop anywhere from 5 to 7 points. That 720 would drop down to a 715, that 710 probably a 705, and that 700 down to a 695. However, I just want you guys to know that the drop in scores for hard inquiries is not immediately in my scores. So if you had a 700, a 710, and a 720, and I pulled your credit and that hard inquiry was a 5 to 7 point drop, just so you guys know, that drop is not immediate. I'm still gonna have a 700, a 710, and a 720 on the scores that I pull. It takes about 2 weeks for that hard inquiry to get in there and reduce the scores. So if you were applying for credit elsewhere for something else, maybe 2 or 3 weeks from now, and I did a hard inquiry, then those reduced scores, the 695, the 705, the 715, would show up. But just so you're clear, when a lender does a hard inquiry on your credit report, yes, it drops the score, but it's delayed about 2 or 3 weeks until it sets in, and it's only about 5 to 7 points. So you have plenty of time until you see the result in the score, but more importantly, what you have today, a 740, a lender pulls your credit, you get that 740. That 5 to 7 point drop only happens a few weeks from now, and in the event that that credit report was the one that they used to get you to the finish line, you wouldn't be penalized in the lender's eyes. You wouldn't be penalized as a consumer thinking that your credit scores dropped and it's going to cause you issues on the loan. It's not. It doesn't show up on our scores. It'll take a while to get there. It may show up in some other credit models, or if you ended up having to reissue credit again down the line, like I just discussed, for maybe a new construction or pressing pause on some type of project 6 months down the road, then those inquiries would show up in the scores, and the scores would probably be reduced. But it's not immediate. It takes a few weeks, and it won't affect any decision on the scoring model on our side. So listen, hopefully you found this video useful. If you did, do me a favor, like, comment, and please subscribe. And if you or anybody you know that wants to have a conversation with me about credit, getting pre-approved, or just the future of the housing market, call us, email us, text us. Let's set up a consultation. We're always here for you. Until next time, stay tuned.